This is Bloomberg Surveillance Early Edition with Dani Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Top central bankers beat the hawkish drum, saying they have a ways to go in reining in too high inflation. New CPI data from Spain and Germany add fuel to the debate. Wall Street's biggest banks all passed the Fed's annual stress test, clearing a key hurdle for returning billions of dollars to investors. And the chips are up. Micron delivers an upbeat sales forecast in a sign that an industry glut is easing. Welcome to Bloomberg Surveillance. It's the early edition. Good morning to everyone. I'm Dani Berger in London. Kriti Gupta is in New York. Kriti, I got to say, these markets are hard to read. We got a whole lot of hawks yesterday in Sintra. Inflation's still high in Europe, but I kind of get the sense that quarter end is more important right now for markets than those facts.
Yeah, it does actually feel like rebalancing is afloat here, because if you look at the fundamental factors, the commentary coming out of Sintra, even the perhaps good news you got out of Micron overnight, should all point to a positive open, and yet we are seeing a little bit of that, but perhaps not the same momentum that we would expect. And the NASDAQ futures up here higher by about 0.2%, because I would say out of the three benchmarks, the S&P 500, and of course the Russell as well, the NASDAQ is where you're seeing outperformance, but again, only by 0.2%. So again, nothing really to write home about. Let's see, though, if those gains accelerate or get paired as we get closer and closer to those opening bells. The bond market gets interesting, though, Dani. As to your point, we talk a lot about what's going on in Sintra. The two-year yield, 4.75, you're higher by 4 basis points already. So you are seeing a little bit of repricing. I think the comments coming out from Chairman Powell specifically about the idea of back-to-back hikes not being off the table is seen as not only hawkish, but perhaps probable. And that's something that is being priced into the market here. Again, 4 basis point move already, and it is only 5 a.m. in New York. What's interesting, though, is how that squares with the rest of the dynamic, because, of course, the ECB, the BOE, and, of course, the BOJ dealing with very different issues, as is the PBOC. And I think the highlight overnight that we got from the Asian session is simply that the yuan has had its strongest fixing yet again. 7.25 on the offshore yuan, the currency pair here, stronger for the dollar, I should say, by about 0.2%. That being said, this is the third time that they have gone and kind of intervened in the currency by a larger margin than expected just this week. So the question here is, how does the Chinese economy really fare as we talk about these same pressures: inflation, recession, and of course perhaps money pulling out of that region as well. NYMEX crude is always a great check for those questions. 69 handle down, up about 0.4%. But again, how much of that is a geopolitical story as opposed to really some sort of indicator of whether or not recession is around the corner?
Well, Kriti, let me take you over to the European session. We're about 2 hours into the European cash equity trading day. Most of these indices are doing better, except for the FTSE 100. Mid-cap UK stocks doing even worse today. There's some concerns there about not national, but utility companies. Will they be nationalized? We're going to talk about that later in the program. We've also had a whole lot of data out of Europe. We just recently got regional figures from Saxony, that state in Germany. Again, inflation picking up in the past month, 6.2%. It was around 5.7 the month prior. So that is picking up all the regional German data. Spanish inflation, that was still too hot. So we're just seeing a reaction to that. That's why German 10-year yields are moving higher this morning, about 3 basis points rather. UK 2-year yields, this was a weird thing, because yesterday when Andrew Bailey was saying we're going to be higher for longer than what most people expect, more or less, we actually had buying on the front end of the curve. So finally, maybe a little bit more reasonable. It makes more sense, the action we're seeing today. But again, Kriti, I go back to this idea that it's just a lot of month-end weirdness. And finally, so that was the inflation data. We also had a Riksbank decision. They're going to be unwinding their bond balance sheet more quickly. But even so, the krona barely stronger. The Riksbank pointing out a weak krona is an issue for them, Kriti.
Right, and of course, something that brings us right back to the European inflation battle, and perhaps some of the commentary we saw out of Sintra as well. I want to bring in a true expert to break it all down. Economics editor Zoe Schneeweiss joins us from Vienna. Zoe, Spanish inflation back below 2%. Is the crisis over? How does the ECB interpret something like that?
Yes, the Spanish data really is quite remarkable. Just a reminder, a year ago, Spanish inflation was above 10%. It peaked last July at 10.7, and now it's down to 1.6%. Why is this happening? So it's partly a base effect here. We compare with inflation, as a reminder, we compare with a year earlier, and that just means that those very strong energy prices we had a year ago now no longer are in there. Is this crisis over? Not really. The base effect means that actually by the year end, Spanish inflation probably will be around 4% again, and being sustainably below that 2% target that the ECB has is probably probably still a year away. But then also as a reminder, the ECB does not target a specific country; it's the region as a whole. Now, in the region as a whole, you already touched on German data. Germany will actually see an acceleration in June. Again, it's the base effect. A year ago, there was this super cheap ticket in Germany where for €9 you could go, or you could use public transport for that. We had that in June, July, and August last year. So this year they have a new ticket, but that's €45 versus those €9. So again, the base effect means that now June, July, and August will see way stronger inflation readings.
Hey, Zoe, the Riksbank governor is speaking just at this moment at a news conference saying that CPIF could be moderating slower than we thought. Of course, in the decision, they talked about the weak krona, the issue that had from them. We're barely strengthening in the krona after this decision. How big of a problem does Sweden have on their hands, Zoe?
So on Sweden, some economists were predicting that they actually could have done 50 today. So 25 is something that might be disappointing a little bit. At the same time, though, as you mentioned, the Riksbank said that they would be cutting down on their bond portfolio more quickly than anticipated. Overall, in all these countries across Europe, be it in the euro area, be it Sweden, that's not in the euro area, we have the issue that inflation just is more persistent than they think. And that really is a problem for policymakers across the region.
Certainly something we're going to keep our eye on. I have to say, a job I do not envy for anyone around the world. Zoe Schneeweiss joining us from Vienna to break it all down. We thank you. From Europe, we go right back to the United States. The big banks all passed the Fed's annual stress test. However, many have warned that they will probably hold off on announcing potential payouts until they get more clarity on those new capital requirements. Joining us now to break it all down, Bloomberg Sonali Basak joins us right here on set, waking up bright and early for us. Look, before we get into the nitty-gritty, one of the concerns around the last round of stress tests was that perhaps the doomsday scenario wasn't doomsday enough. What was the doomsday scenario here?
Well, we did have a steeper drop in GDP, but one of the problems here is the interest rate testing, given the sharp volatility we have seen in rates and the bond portfolios that many of these banks have. Now, remember, the stress tests themselves test banks with over $250 billion in assets, and that leaves a lot of questions about banks that don't have that many in assets and are perhaps more vulnerable to some of these scenarios. I will also say, on the heels of these stress tests, one good news here is that all of them have passed. But then you have groups like Better Markets that are quite frustrated and saying that is a quite misleading results given all the stresses we've already seen in the banking system and the all clear here to try to give banks more ability to return capital to shareholders on the wake of an all clear like this.
Well, to that point, Sonali, there's a couple more things we need to wait for, right, to get that all clear. The FDIC insurance fund, the capital requirements. What do banks want to hear from those things that do give them the all clear to return shareholder capital?
Well, there's a few things. There's the international capital rules. Also, there's Basel III. Then there's more from the Federal Reserve to hear about the direction of travel here when it comes to more capital requirements. There are a couple things that are interesting here, Dani, and one of them is this idea that there were so many banks also that really hit their minimum Tier 1 capital ratios in these tests, which means that they might look to go to the bond markets to kind of boost their buffers here. They might hold off a little bit when it comes to more strict capital return. I would also say an interesting dynamic here was that exploratory market shock, because even though we did definitely see all these banks pass that market test, we did see out of more than $540 billion in potential losses here in this adverse scenario, almost $100 billion just came from that exploratory market shock faced by the banks with such big trading desks. So certainly a big amount of losses to bear by the world's biggest banks, the United States' biggest banks, and a lot of questions around how much capital will be required to hold against these trading desks in the future, let alone from this year as we look for the Fed to change some of these rules.
Sonali, thank you so much. That is Bloomberg's Sonali Basak. Now to the world of tech. Micron gave an upbeat forecast, even as the chip maker continues to face challenges in China, signaling that an industry oversupply is starting to ease. Let's get now to Bloomberg Quick Takes Alex Webb. Setting the China story aside for a moment, is this all clear, not just for Micron, but for some of the greater supply industry issues for this industry?
I mean, it certainly looks that way. Essentially, the market was expecting revenue of about 3.9 billion in the fourth quarter. Sales are likely to be above that, 4.1 billion. That's even as Micron faces some headwinds in China. It seems to have become something of a victim of the contretemps between China and the US over semiconductors. And because the space they're in, memory chips, is highly commoditized, there are lots of companies who are able to do this. The three big players, of which they're one, that means it's been quite easy for China to sort of make it harder for them to get into the market. The thing you've got to remember about Micron, which is a kind of mind-boggling number, their revenue in the 12 months through June have fallen 44%, right? Not through June, of course, sorry, through May.
Right.
But it's fallen 44% from a year ago. And like, they've been trying to make the case for some time that the boom and bust cycle in chips was over. This is clearly not the case, particularly in memory chips.
Yes.
Well, let's bring the China piece back into the equation here, Alex. I think when the sanctions or the blacklisting headlines first initially hit, a lot of analysts had written that off as saying, well, it only makes up about 10% of Micron's revenue. How big of a deal could this be for a company that still is kind of investing and expanding in that country?
Yeah, the issue is basic. If you've got struggling growth, of course, they're shrinking at the moment, and China is, perennially still, when it comes to electronics, a big growth market. You can't grow in that market because there's pressure. Then, of course, you've got a bit of a problem. The CEO said that China is a kind of low double-digit percentage that is likely to be affected as a consequence of this. So, that's a big chunk out of the opportunity, the upside opportunity. It's clearly not the lion's share of its business. Shares are trading up. Some of the analyst coverage coming out of it didn't seem actually that optimistic given the share reaction, but the overall message seems to be things aren't quite as bad as everybody had expected.
Okay. Alex, thank you very much for that update. That is Bloomberg's Alex Webb. Now, coming up on the show, we're going to catch up with TD's Pooja Kumra on why she sees no more rate hikes from the Fed this year. And the UK's biggest water supplier is said to be in talks over contingency plans as its debt pile surpasses £13 billion, or almost $17 billion. We're going to have more on that ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Dani Berger in London. Look, a lot of the commentary you're seeing in the bond market is really on the heels of what you heard in Sintra, Portugal, where all of the central bankers, the major ones at least, really talked about this hawkish rhetoric. We kind of knew that. We knew that they were going to stick to that tone, but they did it to varying degrees. And I think something that really stood out for me in that panel was Chairman Powell saying, look, the progress that's been made in the labor market is encouraging, something that has been noticeably sticky in the last year or so. And I want to kind of, for our TV and radio audience, put that into a little bit of perspective. Initial jobless claims, we are due that data in just a few hours. Well, it's been ticking higher for the last couple of weeks. That is positive news from an economic perspective, simply because the Federal Reserve needs that softening in the labor market. Now, look, it's only been a few weeks, so you are seeing this kind of increase in those claims, at least when it comes to the 4-week moving average. But will it stick? And that's going to be a major question. At the same time, you are seeing the same labor issues become something to worry about in the ECB, the BOE, et cetera. I want to bring in a true expert, bring a little bit more analysis. Bloomberg Markets Live editor Noor Al-Ali joins us. Noor, how much can we read in to this kind of labor market softness progress, for lack of a better term?
Well, look, I mean, you're absolutely correct. The Fed does have a dual mandate. It's got a lot on its plate. But, as well as that jobless claims or jobless data shows a tick higher, which is what the Fed has been wanting to see. But also you see that labor costs and labor costs going higher, productivity going lower. And that's an issue, of course, on the long run, because you still have inflation still ticking much higher than the Fed likes to see. And, we had Powell come out earlier today, doubling down on comments that he's given a couple of weeks ago. And he said we might see, 1 or 2 more hikes this year. And I'm not discounting that at all. I think we're definitely in a zone where we still need to see more affirmative action from a central bank's perspective, and that's what treasuries are telling you, particularly on the short end of the scale.
Nor, I mean, it was really remarkable to see this hawkish choir yesterday on that panel, except for Ueda. I mean, how much of the story of the rest of 2023 is going to be about central bank divergence rather than cohesion about moving higher?
That's absolutely spot on, Dani. And I just want to know, I loved watching it. You know, I was away from my desk, but I had to run back when I saw people saying, oh, it's hilarious. And I was like, wait, hold on. Monetary policy, hilarious? I've never laughed while studying this stuff. So it was really nice to see a bit of an ease into these very difficult conversations that we're having, particularly with the Japanese yen here, Bank of Japan, and the PBOC. You're definitely seeing that diverging theme really play out between the Western developed central banks and their Asian counterparts. You know, PBOC really coming in, stepping in higher in the fixing for the yuan rate. They're really trying to prop up the currency. You know, we had the finance minister come out earlier from Japan, you know, intervene again verbally with the Japanese yen, but you're seeing markets push back here. And I think that's going to be a very important theme coming into the second half of the year. Just how much action do central banks or, you know, officials in total, because the BOJ told you it's not our purview, it's the Ministry of Finance, but obviously it's something that they're watching very closely.
Right. And of course, you know, the Ministry of Finance and the BOJ don't have the same separation as we see in other regions with central banks. Nor, you teased up our next conversation perfectly. We're going to get into the jokes after this next commercial break. Nor, thank you so much. That's Nor Al-Ali. And for more market analysis, check out MLive Go on your terminal. The jokes are next. Stay with us. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London with Kriti Gupta in New York. Now, the ECB Forum wrapped up with a panel with the heads of the world's 4 major central banks. And if I were to tell you that the one that got the most laughs out of all of them was BOJ Governor Kazuo Ueda, would you have believed me? That's exactly what happened. Take a listen.
I didn't know there was going to be so much traveling and so many press conferences. The yen is being influenced by many factors other than our monetary policy, including the policies of these 3 banks. So we'll see. We haven't had any serious monetary tightening for 3 decades. So in terms of that, the lag in the effects of monetary policy could be at least 25 years.
I love anyone that takes a dig at the idea of long and variable lags, because it is silly. But Kriti, the bar is so low to be funny for a central banker. It is maybe way too low.
I gotta say, I think the highlight of that moment was just how much of a laugh it got out of Christine Lagarde, just to the fact that she really kind of almost, I feel like, was 2 minutes away from giving it a standing ovation. But Dani, I think to your point, it is kind of a very low bar, and I think the BOJ here is really struggling with the fact that they're kind of grouped into even this panel, but dealing with very different issues than the BOE, the ECB, and of course the Federal Reserve.
Yeah, and of course, Ueda is a guy, look, he's been an academic for a long time. He was on the BOJ a long time ago. Kind of the idea that he first started joking there of getting back into the circuit. I mean, you can see why he might be a little bit shell-shocked about that one. All right, Kriti, from the macro jokes to some more of the micro stories, let's get into some of the top European corporate news. Siemens Energy's wind turbine concerns are growing. Now, executives at the firm are worried that fixing the issue may far exceed the previous estimate of 1 billion euros. That's according to Bloomberg sources. And Kriti, in reaction to this, because of course we learned about the $1 billion issue last week, is now they're starting to reduce their exposure to Gamesa, which is the wind turbine unit. So they're trying to fix it, but Siemens Energy shares, they are down today pretty decisively.
Yeah, that 1 billion or 1 billion euro story is pretty fascinating, especially when it comes to the idea that, I mean, you said this before, it was already reported, but this is going to be a longer term fix. I mean, the size of some of these wind turbines, just to really water it down and simplify, to have this fix in all of them is a real undertaking. And not only will it cost money, it'll cost time as well, which is never positive from the investor standpoint.
Today really feels like a day where we're just examining European utilities. Kriti, you pointed out the excellent lead into the story for Bloomberg that essentially it's because these things are shaking. They're not supposed to be shaking. They're supposed to be turning. And Kriti, of course, later in the show, you and I are also going to be discussing the drama at Thames Water. There are issues there. It long stems from all the debt they have piled up. Politicians are reportedly discussing now nationalizing it. But Kriti, given everything that's happened with the war, I mean, infrastructure in Europe, it is at still a crucial moment.
Right, and that infrastructure spend, I think, is crucial as well. When we're talking a lot about fiscal budgets that are really stretched from France to England to, I'm sure, the periphery as well. So a lot of pain for a lot of these countries that are really looking to kind of step into the future with some of this renewable energy.
Yeah, exactly. I mean, look, it's a big headache, and we're working our way through it. All right, coming up on the show, we're going to turn our focus back to central bank policy paths, rather. We're going to be speaking with TD Bank's Pooja Kumra next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Top central bankers beat the hawkish drum, saying they have ways to go in reining in too high inflation. New CPI data from Spain and Germany adding fuel to the debate. And Wall Street's biggest banks all passed the Fed's annual stress test with flying colors, clearing a key hurdle for returning billions of dollars to investors. Meanwhile, the chips are up. Micron delivers as upbeat sales forecast in a sign that industry glut may be easing. I'm Kriti Gupta in New York with Dani Berger in London. Dani, it does feel like some of the micro stories are coming back, but really the hawkish take in Sintra perhaps moving the market a little bit more.
Yeah, I'm surprised it didn't move it yesterday. If anything, the market reacted to the opposite of what you would expect it to. We'll get into that in just a bit, Kriti. But we are now seeing European stocks moving higher. I mean, marginally 0.1%. UK underperforming. Some utility issues there. Of course, utility issues for Gamesa too. Now, the Swedish krona, it's now losing steam. It is now falling versus the euro. This is a problem from Sweden. Riksbank hiked today by 25 basis points, but they also started QT, and they're, of course, selling off their bonds more rapidly at this moment because a weak currency is an issue for them. They are importing inflation at a time when they're trying to combat inflation. Perhaps they need to do a jumbo hike. Perhaps today wasn't enough. Now, we've also been getting some regional German inflation numbers throughout the day. We also got Spanish inflation back below 2%, but core, it is still sticky. The regional German data, that is hotter too. We're going to get the full picture at around 1:30 p.m. UK time. So in the meantime, selling bonds both in Germany and in the front end of the UK curve, Kriti.
Yeah, certainly something that we're going to be digesting. What's really important here for the States is going to be kind of how you play this and how you see the fallout in terms of the equity market. Look, you're looking at futures in the NASDAQ space higher by 0.2%. But again, similar to the dynamic you're talking about, Dani, yesterday there didn't seem to be much of a positive reaction that you're seeing today. But even if you look at the benchmark S&P futures, for example, they aren't moving in the positive direction by that much. So that's going to be something to keep in mind. The 2-year yield at about 4.77 is going to be crucial here, because as you see yields higher by about now 6 basis points, that hawkish rhetoric that we're seeing in Sintra getting repriced very, very quickly. I wonder how much of that story is going to continue as we talk about this divergence from central banks. Sure, they're all hawkish right now, but in the future, at some point, one of these banks, the Fed, the BOE, and the ECB, we'll put the BOJ on the side for now, is going to be slowing down faster than the others. And I wonder, again, what that might mean for a country like China, for example. Overnight, the PBOC giving its third fixing, strongest fixing, I should say, for the yuan this week, 725 on that currency pair. So certainly something that we're going to be watching, as essentially it's been made clear a weaker yuan is not acceptable to the PBOC. We come back to the recession story. NYMEX crude is always our really great gauge for that 69 handle there, pairing some of the gains we saw just 30 minutes ago, but still in the green, but just marginally, Dani.
Well, let's get back to the central bank story, because several of the world's top central bankers say that resilient economies are keeping inflation too high and more monetary tightening will be needed. Christine Lagarde, Jerome Powell, Andrew Bailey, and Casio Ueda spoke at the ECB Forum in Sintra, Portugal yesterday.
We still have ground to cover.
Although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
We are data dependent. We will decide on a meeting-by-meeting basis.
We will be evidence-driven, so we will wait for the next set of evidence for our next meeting.
Underlying inflation is still a bit lower than 2%. That's why we are keeping policy unchanged at the moment.
If our baseline stands, then we also know that we will very likely hike again in July.
We're going to move the decisions a little bit, make them a little bit with a little bit more time in between them.
We will do what is necessary.
I wouldn't take, moving at consecutive meetings off the table at all.
So the stars there of monetary policy. Let's get to a star of rate strategy. It's Pooja Kumra, Senior European Rate Strategist at TD Bank. Pooja, thanks so much for joining this morning. All right, so perhaps it wasn't surprising we saw some hawkish language from those central bankers, but they did step it up. Maybe what was surprising is what rates did yesterday. Yields fell. We were buying the front end, again, as Bailey, Lagarde, and Powell all said they were going to be more hawkish. What do you make of that price action?
So, yes, rates never make sense, that we figured. But I think yesterday, a couple of things that I noted was, first of all, we do need to be a little more cautious ahead of month end as well as quarter end. Your moves can be exaggerated for no particular reasons. I think what was leading the rally is also the move in gilts. I think markets were expecting much more hawkish tone from Bailey as well as Phil. Again, we got no insight into how they were thinking. And that's why if you see on a cross-market basis, gilts did perform the most. And I think generally the rhetoric was hawkish, but I think yesterday markets thought it was pretty much similar to what we have heard from them mostly. But I think where we are trading right now, it's going to be choppy. We are actually going to just trade each and every data point. And I think at this stage, we need to accept that most central banks need to sound hawkish primarily because they don't want markets to price in cuts. They all mentioned yesterday that they don't expect inflation to be at the 2% target this year or next year. So I think the worst thing that they want markets to price right now is cuts. And I think that's where the hawkish tone sets in.
Okay, so with that, Pooja, then, are you a doubter? Do you doubt the fact that they're going to go 2 more times and maybe that was just a tool, again, to make sure the market didn't price in cuts?
So the thing is, in the June meeting, they had so much evidence versus the payroll report and CPI. So the key question is, why didn't they go in June?
Exactly.
And that's where, heading into the July meeting, we don't see that the Fed will have much more evidence. The first thing will be tomorrow's PCE number, which is likely to see a further slowdown from CPI, which came in at 0.4%, and it's likely to come into 0.3%. And similarly, we will see another slowdown in July's CPI report as well as unemployment report. So I think the basis right now, if Fed just wants to be hawkish and hike, that's different. But I don't think the data is any different or stronger than what they had in June. I think the turning point for markets will definitely be going into the Jackson hole in August. I think that's where most central banks will try to give us more direction. Because whatever they said that they want more evidence of slowdown, I doubt they will get that in the next 2-3 weeks. Data will be choppy, which means rates will be illogical.
Well, Pooja, in terms of kind of rates being illogical, it feels like the sentiment right now, especially around the Federal Reserve, the BOE, and the ECB, is that they're all on the same page, being hawkish for longer, higher rates for longer. But Dani and I have been asking almost all of our guests this question: at what point do they start to diverge, and when does that become a problem? Although I feel like from a trading perspective, I might be an interest rate strategist dreams, a very easy trade to make. But from an economic perspective, when should we be concerned about it?
So first thing is, I think divergence will happen. I'm not hoping for, but if we do see certain shocks, like for example the SVB crisis or the LDI crisis that we saw. But so far we have seen that we have coped really well. I think we could see more divergence coming in if we do see more significant slowdown, especially in Europe. The PMI services have started to slow down pretty aggressively. We have also seen core inflation as well as the headline inflation is actually working as what ECB wants. So I think that's where we could see a little more divergence setting in. But I think the next 3 months, it's hard to see the general rhetoric changing from any central bank. And I think what we also gathered from Sintra yesterday is that all central banks do talk a lot. They do discuss the route forward. And I think they are all addressing the same inflation, sticky inflation problem across board. So I think next 3 months, it's hard to see much divergence. And I think after that, we will be seeing how different interest-sensitive sectors get hit across board. Like, for example, something that we have been seeing, that households still have longer-dated mortgages in Europe as well as in US, but in UK, we have short-dated mortgages. They will get hit by the end of the year. So I think that's something that's more likely to play out in Q4 rather than right now in Q2 or Q3.
What did you make of kind of the longer term levels that Chair Powell had specifically spoken about? I feel like the Federal Reserve for a very long time has had that reputation as central banker to the world. He said we might not hit that 2% inflation target until 2025. Is that a timeline that works for the rest of the world, Pooja?
Well, I think they do have to say that as per their forecast. It's not a timeline that it works, but I think they're still trying to stick to the 2% level. I think they need to tell markets that when it comes to their wage expectation, they should keep in mind that the 2% is still their target. But the fact that they are not reaching 2% by 2025 across board, which also means that they will have to sound hawkish irrespective of this. I mean, they will have to turn a blind eye to slowdowns. And that's where I think the move here for rates is potentially higher till we see any move lower when it comes to rates, if you do see this hawkish rhetoric, and especially with markets actually just reducing their cuts from Fed curve every single day for December. So I think we've moved a lot when it comes to December pricing for US.
Well, I guess some of the hawkish rhetoric has worked then. Pooja, I'm afraid that's all we have time for. Thank you so much for joining this morning. It's great to see you as Pooja Kumra of TD Bank. Now, coming up, we're going to get more on London's water crisis as the UK mulls nationalisation of Thames Water. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London with Kriti Gupta in New York. Now, Britain's biggest water company is facing a crisis more than 30 years after it was privatized. Joining us now for more on this is Bloomberg's Eamon Farhad. Eamon, thanks so much for joining. Look, this is one of those things, you know, I get the bill that comes in the mail for Thames Water. It's water, it's a utility. You don't think about it. How did we get to the point where they're in crisis mode now?
Yeah, so as you said, since privatization about 30 years ago, lots of the infrastructure, you know, fixing your pipes, all of this stuff has been funded largely by public debt. Now, for Thames Water, that's amounted to £13 billion of public debt, and it's got the highest ratio of debt to equity, of any water company in the UK. Some of that debt is linked to inflation. As you know, rates are going up, so they're in a very difficult situation.
So give us some background here. I mean, that's been kind of the macro theme for a while, but how did we get here with this particular issue?
So right now, water companies in the UK, the way that investment works is every 5 years they present kind of a business plan to the regulator Ofwat. And right now we're kind of getting into that next business plan for the 2025 period, which will be presented in October. Because of that, all the companies are kind of going through their reports, looking at their results. And I guess at this point for Thames Water, it looked like their financial resilience just wasn't where they wanted it to be. So all of this has kind of happened in the last 24, 48 hours because of that.
Yeah, so I mean, it's quickly evolving. I know we've reached out to some of the investors in Thames Water. If they're watching, they're more than welcome to come join us, and basically just pointed us to the statement from Thames about press speculation. Yeah. But what do we actually know? What are the talks that are going on? What are the options for Thames Water?
So the government really is trying to push it back to try and find some kind of market solution. You know, they're saying that Thames Water is talking to their equity investors, trying to find more equity. Now, we do know that the government is also considering nationalisation. Nationalisation, that is an option. You know, this is a vital infrastructure piece for us in the UK, especially in London. You know, they serve over 15 million customers. So that is definitely a last resort, though, because obviously that pushes it back onto the taxpayer, back onto our pocket, back onto our bills.
Yeah, and especially in this political climate, asking for even more tax, putting it onto our bills at a cost of living crisis is certainly a politically tricky maneuver. Eamon, thank you so much for your excellent reporting. That is Eamon Farhad. Kriti.
Yeah, certainly something we're going to be keeping an eye on in terms of, I want to say, the read-through in the energy story in Europe broadly. But stateside in the U.S. politics, China is back again. Spy balloon that floated over the U.S. earlier this year. Well, turns out it was equipped with American-made surveillance gear. That, according to the Wall Street Journal. Joining us now is Bloomberg Asia government and politics correspondent Rebecca Chung-Wilkins. Rebecca, this story has really kind of evolved so quickly. Turns out China had spy balloons and the U.S. has spy balloons. Why is the technology so important here?
Absolutely. I mean, one of the uncomfortable truths, I think, that this report shows up, and the whole incident about, you know, respective spy balloons, is that it is deeply difficult to untangle and disentangle the reliance of the US and China on one another's technology. The uncomfortable reality that we are facing up is that both of those nations use technology produced by the other in strategic areas of tech. And it's also kind of hits at the fundamental issue of all of these curbs that the Biden administration is pushing out too. It is very, very difficult to effectively enforce that.
How does this lend itself to what the U.S. is trying to do and limit chips further? We had more news. We spoke about it with you yesterday, Rebecca, about NVIDIA, about some of these AI chips. How much of that is correlated to just seeing the sheer amount of U.S. technology in this balloon?
I mean, I think part of it and part of the optics of this story that really captured people's imaginations was that it was such a spectacle. And I think in that context, it's so hard to ignore. It is such a sort of obvious reminder that the US is really still exposed to Chinese supply chains in ways that it finds deeply uncomfortable and in ways that potentially risk its national security. So yes, of course, linked, as you say, to the broader push by the US to curb other forms of technology, AI, namely, we were talking about yesterday too. There is also this sort of ongoing issue over precisely what data the Chinese balloon, was able to transmit using some of this US tech too. Now, contradictory reports here, the latest from the journal citing officials saying that actually the balloon wasn't able to transmit, but we had heard something contradictory previously. So that will be another question, is precisely how this US technology was used.
Well, speaking of that story, I mean, what does the pushback here look like? Do we expect to hear more from the Chinese government, from the U.S. government? What is the political fallout now that we have these details?
Well, it's really interesting. I mean, Beijing so far has been relatively muted in its response to all of these attempts to constrain China and contain China. Really, the most sort of meaningful action we've seen is them taking that restriction, that cybersecurity probe against Micron, limiting their distribution of some of those products to Chinese clients. Now, today, however, we saw this new foreign policy law enacted by Xi Jinping. It's not sort of necessarily new, but what it does do is draw together all of these tools that are already being implemented mainly as regulation or guidelines under one single framework. And the fact that we're seeing this comprehensive umbrella emerge does suggest that China is sort of preparing to start fighting back in a more comprehensive way. If you place that alongside this renewed request by China that the US lifts its sanctions on against China, the implication there being this one specifically on China's defense minister, you can see this combination of one comprehensive framework, specific and more frequent asks being made of the US. The pushback is starting to really come into fore, and we may start seeing some of that retaliation have a bit more bite to it too.
Okay, Rebecca, thank you very much for that update. That is Bloomberg's Rebecca Chung-Wilkins. Now, coming up, more inflation data out of Europe on deck. We're going to get to your daily brief next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Kriti Gupta is in New York. Let's get a look at what's ahead today. Now, we're going to get another CPI print out of Germany. That will be around 8 a.m. Eastern time. We've already seen some of the states come in hot, so likely this data point will come in hot too. Now, that's going to be followed by U.S. GDP. We're also going to get core PCE and jobless claims at 8:30. Will those jobless claims confirm the tick higher we've had in the jobless rates? Then Fed speak continues. We're going to get Atlanta Fed President Raphael Bostic. That'll be at 3 p.m. Eastern time. And finally, Nike reports earnings after U.S. market close. Kriti, you've been buying some Nike sneakers as of late. You're going to be supporting this one?
You know, I got to say, fun fact here, I bought a pair of Nike factory sneakers in college, and I have loved them so much, and they are so worn out that I'm actually in the market for a new one. How did you know?
Wait, what's a factory sneaker? I have no idea.
It's like their outlet store. Like they're, because I'm very cheap.
Look at you, so economically savvy, Kriti.
Yeah,
I love it.
This is what happens when you have Indian parents. It just kind of comes naturally through the blood. We should mention the stock market performance, though, because as you said, they are reporting after the bell, but the stock is already higher by 0.4% in pre-market trading, so certainly some movement we're going to be watching in the next, I want to say 12 hours or so. But But let's stick with that earnings story, Dani, and talk about Micron here, because that seems to be the big mover this morning, especially after they come out and delivered a pretty strong forecast. Turns out that glut that we were worried about may not be as big of a problem, higher by 3.6% on those shares. The ticker there is MU. What's interesting to me, though, is that even with all the China pushback, they're still expecting to really outperform.
Yeah, maybe just a lot of that China stuff is priced in because they are losing a lot from China, from being unable to sell to them. But that glut in supply chains, it really is that pandemic bullwhip. It's just another example of some of that is finally easing. You know, we have some of the inflation figures coming down and supply chains coming back to life. It's great news.
Yeah, it's positive, especially if you view them as that kind of economic bellwether. And it's going to be kind of a similar story when you look at the banks, for example, which again are also higher in the pre-market. This, of course, coming off the stress test. It looks like they passed with flying colors and in a move that they're potentially able to return some shareholder value. The underperformer here, though, is Citi shares. The ticker is just the letter C, down about 0.5%. But if you look at some of the kind of the more regionally exposed banks, Bank of America, Wells Fargo, they're outperforming by 1% or higher. So some good news, Dani, when it comes to the banks.
I guess the thing, though, is in terms of these banks actually returning shareholder capital, it's not the all clear yet. There's a lot of things they need to wait for. We heard in Powell's Senate testimony that some of these large players are going to have capital requirements, something like up to 20%. He didn't give a lot of details, so we need to get our hands on that. And then, of course, there's the FDIC special assessment. How much, again, focus on these large banks, are they going to have to contribute to the insurance fund? Until we know those figures, until the banks know those figures, they can't really say how much capital they're going to be able to return.
Yeah, and that's going to be crucial as we talk about, again, what is that doomsday scenario that they're really testing for? Because remember, even before that regional banking turmoil, these banks, again, passed with flying colors. Certainly something we're going to be keeping an eye on. But speaking of regulation, Dani, a case that we've been covering all week long, one of my personal obsessions this week has been the FTC kind of hit or case against Microsoft and their $70 billion acquisition of Activision. Look, we are on day 4 of testimony as of yesterday. Day 5 is today. We're expected to get closing statements today and potentially a verdict as early as this evening. Microsoft shares down a little bit. Activision Blizzard shares up. Again, not moves I would write home about. But to me, there is a quote that came from the CEO of Microsoft, Satya Nadella. If you'll kind of indulge me here, let me read it out to you. He said, "If it was up to me, I would love to get rid of the entire exclusives on consoles. Well, that's not for me to define, especially as a low share player in the console market. The dominant player there, Sony, has defined market competition using exclusives. That's the world we live in, and I have no love for that world." Satya Nadella with some fighting words for Sony, Dani, but I think it's important to say, look, he didn't make the rules. This is the way the gaming market works, and that's going to be something that's really scrutinized in today's testimony.
Kriti, can I just say I love how much you love this story. Every morning, folks, I get an update from Kriti on what's happening with the Microsoft Activision story, and I am here for it. All right, that is it for Early Edition. Surveillance is up ahead with Deutsche Bank Global CEO. This is Bloomberg.